Saurabh Mukherjea from Marcellus Investment as well on the show with us. Saurabh, hi, good morning. Good to have you on the show. Saurabh, it seems like the finally much awaited broader market catch-up is beginning to take place. Do you think we're going to see a material move when it comes to the mid and the small caps? And is it time to increase exposure there?
I think if the Q3 earnings in January, February, if they continue to show the trend that we saw in Q2 earnings. Q2 earnings was revenues coming back somewhat near pre-COVID levels and sharp reduction in costs, around 9-10% YOY reduction in costs, and thus a big jump in operating profits. If that trend continues in Q3, which I think it will continue in Q3. I think you'll see an even sharper jump in operating profits in Q3. Then this broader market revival spreading across small and mid caps, and even in large caps spreading to the sort of less than champion stocks. I think we will continue seeing that. Obviously, all of that will get supported by abundant cheap money sloshing around the global financial system and thus making its way to India.
What are the big bets then, Saurabh, where you think money can be made and across, market caps?
I think the first one, the biggest one, I think is financials. Financials took the biggest pounding through Jan, Feb, March, April, and therefore the call that investors, and I'm sure I'm not the only one, I'm sure there are millions of your viewers who are trying to make the same call, is should we load up on financial services stocks, especially lenders now, or should we wait? Our call is through July, August, September, through these winter months, that buying champion lenders makes a great deal of sense, because we do believe that come next year, Jan onwards, we will start seeing the loan loss recognition from COVID coming through. I did read in Economic Times this morning that the bankers are asking the RBI for another recast. If the RBI gives that, then you postpone loan loss recognition by another 3-4 months. But provided the RBI does not succumb to the bankers' request, I do think you'll see NPA recognition coming through next year. So the call we are making is champion lenders who already done heavy provisioning, raised plenty of capital, will continue to power through the next 2-3 years, and hence we are loading up on high quality financials. But I do know of other investors who are still hesitant on this front. I think this is the biggest call, if you ask me. Should one load up on really high quality lenders now, or should one wait for another 6 months? The Marcellus view is you buy the kings of capital right here, right now, because you want to benefit from a 2-3 year revival in the lending cycle in our country.
Saurabh, if I could probe a little further, high-quality financials, could you delve into some of the names, or specifically what area these companies operate in, to get a better idea?
Sure. So historical Marcellus favorites that we have discussed extensively on ET Now over the years have been HDFC Bank, Kotak Bank, Bajaj Finance, and as you would have seen in the Q2 numbers, not only have these lenders provisioned aggressively, they're going into the next calendar year with capital adequacy ratios of 20-25%, right, which should be the envy of almost all lenders. But we've also started building positions in lenders one notch below in size. So, for example, AU Small Finance Bank, since July onwards, we've been building a position there. We'll carry on doing so through the winter months. This is a good lender, especially strong in rural northern India, or rural small town northern India. From IPO to now, over the last few years, the stock hasn't done much, and yet it's a high quality franchise, strong balance sheet, good cost control, good NPA control. So AU Small Finance Bank, City Union Bank, another small bank where we've been building positions through the autumn and through the winter months.